Shares of FIGS are up 22% as I'm recording on Wednesday after the company reportedly got about $1 billion buyout offer from a private equity firm. Now, the reported price is about $6 per share. Given the fact that this is out in the open, the stock is moving so much, I wouldn't be surprised if management actually has to respond later today. We'll probably file some sort of press release or filing with the SEC just saying, yes, there has been an offer, there's discussion, something like that. So maybe by the time you see this, that will already have been out. But I think it's worth looking at FIGS. This is a stock that I actually started buying recently, and it was partially based on the idea that this is a pretty good niche business, has a really good balance sheet, and a really attractive valuation. That is obviously exactly what private equity buyers are seeing in a company like this, and they're making an offer that I think could end up being pretty lowball for the company. It wouldn't be surprised if that offer actually moves significantly higher, but let's go through some of those details. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the reporting. And you can see this is from the Wall Street Journal, but this has been disseminated everywhere. Story 3 Capital Partners has made an offer reportedly earlier this week to FIGS for about $1 billion. That translates to about $6 per share. Now, typically when a private equity company comes in and makes an offer for a company like FIGS, they're going to make an offer that is high enough that the market is going to say, you know what, we're not going to price the stock that high. There's maybe something that you can do yourselves to unlock that value. But as a public company, it's not really a compelling price for us. But let's look at a couple of charts to show why this offer may not be compelling as it currently is being reported. The first chart is just a long-term chart since the company went public. You can see that shares were trading over $40 per share for a period of time, now down closer to the $5, $6 per share range. But if we zoom in on that just a little bit, just over the past couple of months, you can see that shares were trading in excess of $6 per share as recently as early November. So the buyout offer was actually less than a 20% increase from where the stock was trading on Monday or Tuesday. And you can see that shares have actually gone well above that. As I'm recording, $6.28 per share is where the stock is trading. So that's indicating that the market thinks that if there is some sort of deal to be had, it's going to be at a much higher price point than just that $6 price point. Typically, there would be an arbitrage between the buyout price, which would be realized in the future, so let's say 6-9 months from now, and the price that a stock is going to be trading at. So if the stock is at $6.28 per share today, it would indicate that investors think that the buyout will be at least $7 per share, if not higher than that. But let's look at why a private equity firm would be interested in FIGS in the first place. I'm going to start here with revenue and free cash flow. You can see that revenue growth has slowed. This is a big reason that the stock has declined as much as it has, but revenue is essentially flat depending on the quarter. Management has given some indications that they see some green shoots happening in the business. There were some inventory issues recently. So even the most recent quarter down a little bit from a quarter earlier, but I'm not reading too much into that. Free cash flow is down, and that's because margins have come down a little bit. Buying has skewed to a little bit lower margin products. So there are a few things there that the company could improve on operationally, but I don't think it's out of the question that FIGS could get back to generating $70 to $100 million in free cash flow per year. On top of that, FIGS has a phenomenal balance sheet, $281.7 million worth of cash on the balance sheet. That means that $1 billion buyout offer would effectively be only about $700 million in cash that a PE firm would have to come up with. If you can get back to that $70 million in free cash flow run rate, that means that you could generate a pretty solid return without any real operational changes at FIGS. So that's, I think, what the buyers are potentially seeing in FIGS. But should investors be buying this buyout rumor? Is there some sort of action that's coming from management that could maybe fend off some sort of buyout? Or are they just going to take this and maybe just look for a slightly higher price? Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the reasons that I think a buyout may make sense for everyone involved here is because the two founders have a relatively small stake in FIGS. They have sold a considerable amount of their shares. And Heather Hasson was recently a co-founder of OOG, if I'm saying that correctly. And this is a company that FIGS invested in. So one of their co-founders, Trina Spear, is now the CEO. Heather Hasson has basically moved on and is now working on a new startup. So unless Spear really wants to maintain control of the company, this is an indication that they were looking at other things to do. Now, as I'm recording, Heather Hasson owns about 1.8% of shares outstanding, and Trina Spear owns about 3.8% of shares outstanding. So that's not a big stake for an owner in a company like this to have to control shares, to fend off any buyout and say, you know what, no, I just want to run this company the way that I want to for the future. This is the time where the board of directors really has to look at seriously at any sort of offer that's coming in. And Trina Spear, given the relatively small stake in Figs, could actually be one of the beneficiaries from the bump in valuation if she does end up taking a buyout. So there's a lot of things at play here. What I wouldn't be surprised to see happen is this at least push Figs in one direction or another. Either they need to go ahead with this buyout, but maybe get a little bit higher price. Maybe they negotiate $7, $8, $9 per share. That could be an incremental benefit for shareholders. Wouldn't be surprised to see that happen. The other thing they could do is say, you know what, things aren't going great at the company right now. Revenue is declining slightly. Margins are down. Free cash flow is down. We need to really juice the stock and the business. So we're going to do some sort of restructuring, or we're going to bring in a new management team, maybe do some sort of very large buyback. Those are all things that can make investors happy if they're trying to fend off this other buyout offer. But both of those things could potentially be good for the stock long term. And that's kind of the way that I'm looking at this. Figs has been in a little bit of a slump right now, and we need to get it out of that from an investor side and even from a business side. So if they're able to do that, and if this buyout offer is able to do that, that could be the kind of catalyst that the business needs to turn around a little bit. I still think there's a lot of potential in Figs long term. I would love to see it stay public, because I think there is the opportunity to grow the business, even if it's not a high growth business. If it's just a 5 or 10% growth business in a really nice niche with really good margins, I think that could be a phenomenal business that could trade at maybe double the multiple where it's currently trading today. That's why I ended up buying shares. I just saw a lot of value in being a niche retailer like this. But obviously, private equity is seeing the same kind of value. So we'll see how this plays out, but hopefully that puts this into a little bit better context. And look for some of those announcements over potentially even the next 24 hours as Figs management tries to respond to the news that they do have a buyout offer out there. It's likely they do need to communicate something to investors in the meantime. But let me know if you have any thoughts or comments about Figs today. Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.